Selling puts is the safest way to make money in the market right now. In fact, it's always been that way. So in this video, I'm going to show you guys not only how to pick the stock, but how to pick your entry and get the stock at a discount or just print juicy premiums every single week. So there are really three steps. One, identify a good stock, how to pick a stock to get into by selling puts. Number two, picking a good entry price, strike price of the option itself, figuring out where the stock is going, where it's most likely to go. This way you have a better idea and understanding of where you're going to possibly get assigned, or if you just want juicy premium, where you're not going to get assigned. Number three, picking the right strike price and rolling out and down if you don't want the shares. So let's dive right in. Let me show you guys exactly how to do this. If you guys are here for the first time and you're learning puts and you're learning options and you're having a little bit of a difficult time understanding, I do offer full one-on-one coaching, training course in Discord. You guys can sign up at any time. I am fully dedicated to helping you achieve your financial freedom and the goals that you ultimately deserve. You guys can sign up at investwithcorey.com right there on the screen or in the information box below. Big news though, before we get into the video today, I am hosting a free webinar this Friday, August 16th, 7 p.m. Eastern time, 4 p.m. Pacific. This is going to be huge. If you guys ever wanted to learn in-depth strategies, how to pick stocks, how to sell puts, sell calls, how to run the wheel strategy, how to get into stocks at a discount, covering advanced technical analysis, fundamentals, and charting, you guys don't want to miss it. I will have a huge announcement. Limited spots remain for the webinar. If you guys are interested in attending my free webinar this Friday, August 16th, 7 p.m. Eastern, 4 p.m. Pacific, the link is in the information box below, so you guys can sign up. I hope to see you there. Let's dive right into the video at hand. The most important thing about selling puts is picking a stock that has juicy premiums and a stock that is pretty good, a decent stock. You don't want to do this on a bad stock, otherwise it's just going to plummet and you're going to lose a lot of money. So it has to be pretty good stocks. I don't want to run the wheel strategy on penny stocks or stocks that are under $5 unless it's SoundHound or SoFi. I really like to pick good stocks. Running the wheel strategy is best on investment stocks, not growth stocks. If you're selling puts for juicy premium, then it's definitely better to run them on investment stocks or investor stocks. And I just call it investor stocks, but really what that means is Apple, Netflix, Meta, Google, Disney. These are investor stocks. Growth stocks are ones that are not profitable, barely profitable, somewhat new, more affordable, a little bit more volatile. Those are growth stocks. So what I'm going to do is I'm going to show you guys exactly how to pick a stock. And after we pick the stock, then we're going to move on to show you guys exactly how to pick the strike price and determine how and where you'll enter the stock. And if you don't want to enter the stock, how to just generate juicy premiums. So we're going to start out with Nvidia. So let's just say that we're looking at Nvidia right now and it looks like it's consolidated pretty good. It really is safe to say that the bottom is about $100. 99 to 100's got a lot of resistance. So we could come up and sell a 104 or even 100. And we can tell because there's been a lot of consolidation and we're in an uptrend right now, and I'll show you guys exactly what I'm talking about. We're in a little bit of a mini uptrend, but not only that, I'm going to put the Bollinger Bands on, and we'll see that on the 4-hour chart, we're kind of near the top of the Bollinger Band, so it's going to pull back a little bit somewhere in the 105 to 108 range. If we go to the daily chart, we will see we're actually at the bottom, which the daily chart is much better for Bollinger Bands. This is a standard deviation of 2, which means 96.7% likely to stay above the bottom of the Bollinger Band over the next week. So if we're going a week out, which is what I always do, trade weekly or bi-weekly options, then it's highly unlikely that Nvidia will drop below 96.45. This is literally a 96.7% chance. So it's safe to say that $100 is probably in the 85 to 80% range, somewhere 80 to 85. So I would say that $100 or 102 would be really good. If we go back to the 4-hour chart, plus we want the stock, by the way, but if we go back to the 4-hour chart, we will see that it's really strong resistance right here. There's a lot of resistance along this line. So 102 is a really good spot. So let's go over to Nvidia right here. Trade Nvidia options. And we're going to go sell put. We're going to go 4 days out. We'll go to 102. And that is an $80 put. Now, this is pretty good premium. If we want to go up to 104, gives us $5 room in the next 4 days, we could get $120. You can generate $10,000 a month selling puts. In fact, I would just go out 2 weeks. I would do this 2 weeks at a time, and I would sell $105 puts because Nvidia is likely to go up with interest rates getting cut next month, and I don't think Nvidia is going to go below 105. So 105 or 106 is really good. So we could go out 106, 2 weeks, $305, click continue. We could sell 5 of these. This would net us $1,500 for 2 weeks. This is about $3,000 to $4,000 a month, depending on how aggressive we go. If we were to go a little bit more aggressive to 108, where it's at now, expecting the stock to only go up, then we could sell 108 for $385. We could probably get closer to $390 for it, and we'll sell 5 of these puts, making $2,000. Here we would make $4,000 a month on $50,000. This is just under like 4%, like right around 4% for 2 weeks. So it's about 8 to 10% per month. You can really seriously make $4,000 to $5,000 a month on $50,000. That's 10% per month. If you were able to sell, let's say, 12 contracts, this would be $124,000. This would be $10,000 a month. So all you really need is about $100K to $125K to consistently print $10,000 a month. Now, this might seem like a lot of work, or you need a lot of capital. I know it seems like it's really hard to get to $100,000, and it can be difficult. But once you get to $100,000, you can print $10,000 every single month selling puts. And Nvidia is unlikely to go below 105 or 106. So even if we were to get assigned at 108, our break even is 104 because we're collecting almost $400 per contract per 100 shares. So this is okay to get assigned because our break even's 104, but if the stock goes up, we keep all of that juicy premium. So this is a very, very good contract to sell on Nvidia. And you guys can see that putting up $100,000 generates almost $5,000 every 2 weeks. If we were to get assigned, we would sell covered calls. This is the wheel strategy. This is for another video. Right now, we're just focusing on the puts. I've showed you guys how to pick the stock, how to pick the strike price. If Nvidia was to fall to say 107, that means at expiration, these contracts would have an intrinsic value of $100, $1 per share. Because the strike price is 108 and the stock would hypothetically be 107, there's $1 difference. So leading up to close and expiration on Friday at 4 p.m., this contract would be worth $100. You could roll out 2 weeks and roll down to 107 or 106 and collect another juicy premium. This way, you don't get assigned. But if you want the shares, which I'm sure you do, then you just get assigned and then you start selling covered calls. In this particular instance, I would get assigned at 108, even though the stock price fell to 106 or 107. Then I would start selling $110 calls 2 weeks out, which would get me another $200 profit per 100 shares. And in this circumstance, would get me $2,400. Plus, I would collect about $200 to $300 for the actual contracts. So this month, I would make about $9,600 plus $2,400 on the shares. So just 1 month, 2 weeks of puts, 2 weeks of calls, 124 grand would generate me between $10,000 and $12,000 in 1 month. Now, of course, the stock could fall a little bit more. And if that was to happen, then we would just sell 105 puts, 103 puts, the dollar cost average. Then once the stock recovered and started going back up, we would start selling covered calls to exit once again. Another stock I really like to sell puts on is Rivian. We can see here that it's really at a bottom. The price pulled all the way back and it filled half of this huge, massive green candle, which is a demand zone right here. And typically when stocks pull back, they usually pull back about 50 to 60%, no more. And that's usually a pretty solid support, bouncing right off the 100-day moving average right here, working its way up, consolidating, falling down, and then consolidating and hitting the resistance zone of $13 yet again. So we could sell a $13 put or a $12 put on Rivian, and we'll go into Rivian options. We'll click on sell put and we will go out 11 days, which is next week. We could sell a 13 put or we could sell a 12.50 put. And since it's almost 2 weeks out, we believe the stock might be going up and it looks like it's consolidating and the whole market is kind of working its way up again. It's likely it would. So we could sell $13 puts and we would get about $45 per put and we would sell 20 of these. This would bring us in about $2,700 to $3,000 a month. $25,000 to make about $3,000 a month because this is only 11 days out. 11 times 3 is just a little over a month. So we would make about $2,500 a month on this, which is a 10% return. If we were to do 60 contracts, 75K to make about $8,000 a month. It's a little bit juicier than running it on Nvidia. I'd run 2 contracts on Nvidia for about $24,000. Then I would run maybe 30 contracts on Rivian to diversify. This would be 37,000. Then you could pick another stock and run contracts on those. This way you're in 3 or 4 different stocks, and each of these stocks are at different strike prices. But this is just summing it all up for you to give you a general idea. If you have multiple positions, if you're all in total $100,000 on your account in different positions, this is how much money you can generate every single month. If we look at 70 contracts on Rivian, it's not quite 100,000. 80 is 100,000. On 100,000, we would make about $7,500 a month just on the puts. So you can see once you're working with 100 to 125K, you can consistently bring in anywhere from $5,000 to $10,000 a month. If you have $200,000, you can 100% retire, and you can pretty much make 5K easily every month, and 10K would be even easier than it would be with 100K, because you'd be working at safer puts, safer deltas, because realistically we could go down to a 1250 or a 12 and make the same amount of money. Of course, we'd be putting up 200K every month to make 10 grand, but we'd be further from the strike price with a lot less likelihood of being assigned. So let's talk about the one big thing that everybody's going to ask: delta. What delta do you want to sell? Well, there's 2 deltas. If you want to get assigned the shares, you could sell cash secured puts 30 to 40 delta. I like 30 to 35, especially if I want the shares. If you don't want the shares, I like to sell deltas around 20 to 25. If they're highly volatile stocks like Netflix and Meta, I like to sell 15 to 20, although they're still not as risky as a put credit spread, which on volatile stocks I like to sell between 5 and 10, no more than 12 to 15. You can still get away with 15 to 20 selling cash secured puts, as they're a lot safer. With a put credit spread, your money goes to Narnia if you lose. It's like off to Atlantis or something, right? It's gone. However, if you sell cash secured puts, you get the stock, which means you're not out the money. Very simple. Find the stock that you want to sell puts on. Make sure it's a good stock. Number 2, use technical analysis to find a good entry point, consolidation, and sell puts right below that. If you don't want the shares, go a little bit lower. Use the Bollinger Band with standard deviation of 2 on the daily chart to figure out where you're going to sell these puts. If you need to roll out and down, you can do so at a week or 2 at a time. However, a lot of the time, it's good to get assigned, because when the stock is falling and you get assigned, the stock recovers, then you can sell covered calls to exit the stock at another juicy premium and profit, which is awesome, and which is why the wheel strategy is so powerful. And the last thing we learned is delta. Very important. 10 to 20 is really safe. 20 to 25 is fairly safe. 25 to 30 is fairly aggressive, and 30 to 35 is very aggressive. Anything from 35 to 45 is basically you want the shares immediately and you want to collect a profit doing so. If you guys are having trouble understanding this video and the puts and the methods and the technical analysis, or maybe it's just too much, or you're just getting started in the stock market, or maybe you've been trading for a while and you just don't understand it, I am excited to tell you that this August 16th is my free webinar. That's right, my masterclass webinar on selling puts, technical analysis, fundamentals, and financials, showing you a lot more than what I've showed you in this video. It's going to be a 1-hour webinar, and it is absolutely free. All you have to do is click on the link in the information box below to sign up. Limited spots remain for that free webinar. I have a huge announcement during the webinar, and I will be taking questions. There'll be a Q&A section of this webinar, so you guys can spend some time one-on-one with me and ask the questions that you've been maybe wanting to ask me on my videos for quite some time. We're going to spend some time getting to know each other. It is going to be an awesome webinar. Link is in the information box below. Absolutely free. If you guys want to learn more on how to grow your portfolio, this Sunday, August 16th, 7 p.m. Eastern Time, 4 p.m. Pacific. Well, this video's over, but don't worry, I got another one just for you, and it's right here. Click that video, and I will see you over there. And remember, till the next video, let's grow our wealth together. Take care, fam.